Hello, my friends. Jeff, Tax Rescue CPA. Today we're going to talk about Georgia state income tax and what we can do to reduce this liability. And I'm going to give you 8 ways. These are what I consider the best ways to legally reduce your Georgia state income tax bill. All right, let's jump in. So number 1 is the Georgia retirement income exclusion. Now, who qualifies for this? Well, Georgia residents who are 62 years or older or permanently disabled regardless of age. So you must have qualified retirement income. These we're talking about Social Security benefit, pension payments, 401k or IRA withdrawals, interest and dividends, capital gains. Now here's another one that's different for Georgia is rental income. Okay, that also qualifies, and annuities. So if you're 65 and older, you can exclude up to $65,000 per person or $130 per married couple. And if you're between the ages of 62 and 64, you can exclude up to $35,000 per person or $70,000 per couple. So again, the unique thing about Georgia on this exclusion is that it allows you to exclude rental income. This is different from most states, and it really makes Georgia friendly to retirees. Okay, number 2. No tax on Social Security benefits. So this kind of goes along with the first one on the retiree, but let's just talk about Social Security benefits specifically. Georgia does not tax Social Security benefits, meaning the retirees, you're going to keep more of what you receive from their benefits. So you may still owe federal tax on Social Security income or the benefits. This is going to depend on the rest of your income and how the Social Security benefits fit in to what else is going on in your tax picture. So some states kind of follow the federal example and partially tax Social Security, but Georgia, fully exempted. Okay, number 3, now this one's kind of cool. So you got to be a little more active with this one, but 529 plan. This is for college education expenses. It's mainly, now college education savings is kind of a little bit of a misnomer because it can also be used for K through 12, private, public costs, whatever school costs for K through 12. So it's not just for college expenses, but this is a tax advantaged way to save for education. The contributions grow tax-free. So you can put money in, it can grow year over year, no tax on the earnings, on the growth that it has. And the withdrawals, as long as they're used for qualified education expenses, tax-free. And those withdrawals at that point are tax-free on both the federal and the state level. But here's what's neat about Georgia is when you put the money in, you can take a deduction on your Georgia income taxes. So that is limited. If you're a single filer, you can deduct $4,000 per child. If you're a married filer, you can deduct $8,000 per child for contributions in a year. So the point of this is that these are going to lower your Georgia taxable income, reducing your tax bill. There's no income limits on who can contribute to this. So unlike other retirement contributions, retirement plans that have income limits, this one doesn't. And again, the money can be used, like I said, for K through 12 education, up to $10,000 per year per student. Also, obviously college expenses, and you can even use $10,000 of it over a lifetime to pay back student loans. Okay, number 4, the child and dependent care tax credit. This is basically the daycare credit. And what Georgia does is they follow or mirror the federal on this side, on this credit. So if you're receiving or getting a benefit from the child and dependent care credit on your federal side, Georgia's going to give you 30% of that federal credit amount as state tax credit. The federal credit can be up to $3,000 per child or $6,000 for 2 or more children. It maxes out at $6,000. So let's take an example of this. If you look at your federal tax return and you're receiving a $2,000 child and dependent care credit, daycare credit basically, on your federal return, $2,000 on your federal return, you're taking 30% of that, or $600 you're going to get as a credit on your Georgia state income tax return. So why does this matter? Well, the credit directly reduces your Georgia income tax bill, and this is going to make daycare more affordable. All right, number 5, the Georgia low income tax credit. So this one, it's a little tricky, and the big point about this one is that it's not refundable, but Georgia offers this tax credit for low income earners. And this is based on federal adjusted gross income. So again, we start on the federal return. What your adjusted gross income, or AGI, is, that's going to determine whether you qualify for this. The credit itself depends on what your income level is and your filing status, married, joint, single. Now, again, this credit is not refundable. It can reduce your tax down to zero, but you're not going to get any kind of refund if the credit exceeds what you owe. So keep that in mind. But this will help low-income taxpayers reduce or even eliminate their Georgia state tax bill. Okay, number 6, military benefits. Okay, this one's pretty neat. We have the military retirement pay exemption. Now follow along with this one because it's a little tricky. Now think about military retirement. Military retirement you can generally get after 20 years. And if you go into the military at 18 years old, this puts you at 38. You're coming out. Now that's hardly going to qualify you for Georgia's retirement income exclusion, which starts at 62. So you're 40 years old and you're getting this military retirement pay. What does Georgia do for you? Well, at that point, you can exclude up to $17,500 of this military retirement pay from your Georgia state taxable income, okay? This is for when, again, you're like 40, when you're under 62. So what I'm talking about here is when you're under 62. Also, if at this point you have other earned income, okay? You take your military, great, I got my military retirement, I go and get a job, you have other income, then you can exclude another $17,500, making the total $35,000 tax-free. And this is when you're 40, 50 years old, okay? Now, boom, when you turn 62, it jumps up to $65,000 because it becomes part of the retirement exclusion that we talked about in number 1. Okay, so the point to remember about this one is between those ages of, potentially 38, I went into the military at 17. I could have retired at 37 and been receiving full military retirement pay. So between that age, 37 up to 62, you can structure this and end up with a $35,000 exclusion of military retirement pay. Okay, so the second part of the military benefits and tax breaks in Georgia is active duty. So if you're an active duty service member, Georgia resident, and you're stationed out of state, not in Georgia, out of state, your income, the military pay that you're receiving as an active duty military member is Georgia tax-free, not taxable in Georgia state income tax returns. Basically, what we're saying here is that Georgia ends up being a friendly state for military, both retirees and active duty personnel. Okay, number 7, let's shift gears to the qualified small business deduction, or the QBI. So who qualifies for this? Okay, this is for self-employed small business folks that are filing Schedule C, partnership, S-corp returns. Now, Georgia, kind of like the child care credit, Georgia mirrors the federal on this one. So it's going to follow the benefit you get for QBI on your federal tax return. And it's going to allow eligible taxpayers 20% of their business income to be reduced, or to reduce their state taxable income. So for example, if your business earns $50,000, you could deduct $10,000, 20% of this income from your taxable Georgia state income tax. Boom, reducing your state tax liability. So this is going to help small businesses and even self-employed folks reduce their state tax liability in Georgia. Okay, Brad's going to round us out to number 8. All right, what did we say for last? Well, this is kind of unique. This is the Georgia Job Tax Credit, and this is for businesses. And who qualifies for this are businesses that hire employees, when they hire new employees in Georgia. How much is this? Well, the credit ranges from $1,250 all the way up to $4,000 per new job per year for 5 years. 5 years, okay? Now, this higher credit amounts are available. The higher credit amounts are available for businesses that are in rural or economically depressed areas. So where you are, your zip code is going to matter for this credit. So this credit is going to reduce state tax liability, and it's going to allow businesses to pay less in state taxes at the same time they're creating new jobs in Georgia. Everybody wins. All right, so let me give you some final thoughts on Georgia income tax savings. And Georgia offers a lot of ways to reduce your taxes, as we just went over, and these are especially for retirees through the retirement income exclusion, for families with the 529 plan and the dependent care credit, for business owners through the QBI deduction and the job tax credit, okay? And the fourth group are military personnel, either retirees or active duty. Either way you cut it, Georgia's treating you friendly. So there you have 8 ways to reduce your Georgia state income tax. Who's doing your taxes?